I'll see if I can interest you in Tecnoglass, Steve, which is quite possibly the worst name I've ever heard. You would expect to see a Tecnoglass driving around in a little, small window fabricator in your local area, but they'll be like Tecnoglass, and it'll be like secretly the fourth because they'll have gone bust a few times. But this is nothing like that, Steve. This is probably the leading and largest architectural glass, window, and aluminium product fabricator in the American markets. Actually headquartered in, and here goes a Yorkshire guy absolutely butchering this, Barranquilla in Colombia. Could be close. Not so confident about that. But yes, it's one of the largest glass fabricators in the Western Hemisphere, has a really strong foothold in the US, both in the commercial and residential markets. They specialise in energy-efficient, impact-resistant glass and aluminium systems, which caters for both the high-rise commercial segments, high-rise residential market, and obviously areas in such as like Florida and the Sunbelt region, which need impact-resistant glass. So when you get your monthly tornado or whatever that comes through, it won't just shatter all the glass. So yes, it's a fully integrated operation. So it's glass transformation, aluminium extrusion, window assembly, all together, vertically integrated, which obviously gives them massive cost advantages and some operational flexibility. Just to give you a quick run through of the products then, so architectural glass, so that is things like laminated, tempered, insulated, specialty glass for building facades and for interiors. Windows and doors, high performance impact resistant windows, pretty much primarily for the US residential market, and extruded aluminium profiles for things like windows, doors, facades. Every window in a building needs a profile of some description to fit into, and this company prefers aluminium. They've been about publicly listed for about 12 years, and it's been a 10x since it IPO'd, so it's doing rather well. The last financials we got was Q1, and the revenue was up about 192.6 million, up about 8%. Gross margin was about 51.1%, which was a record for them, improved from 49.3%. About 71.5 million in adjusted EBITDA. This is all in US dollars, sorry, by the way. Up 13%. EPS of about $1.01, up 15%. And net debt to EBITDA, which is a nice metric for measuring their leverage, 0.1x. So essentially debt-free. So they continue to grow revenues, expand margins through basically pushing pricing up, but also product mix and cost controls. And they've been doing pretty well, Steve, despite softening in the US residential construction market, still growing. Can't say that of all of the US house builders. Market cap. I'm just going to check that, Steve, because I think it might be a little bit higher than that now, because I wrote this a couple of weeks ago. Nope, it was right. 3.5 billion. Forward PE is, if you're taking the EPS of being about $4.87 over the year, you're looking at about a 15 times forward PE. Trailing, you're at about 20-ish, maybe just a little bit over. Its industry peers are in that 15 to 18 bracket. Tecnoglass seems to be fairly reasonably valued, pretty cheap on a forward basis, given its growth trajectory, its high margins, and the strength of that balance sheet. It's pretty acquisitive. You'd be surprised to know, Steve, it bought General Windows. I'm kidding, it didn't. But that's what companies from outside the US seem to buy. But yes, it was primarily an organic growth story, but it has made strategic acquisitions when needed. ES Windows was one of its larger ones, and that basically unifies its production capabilities. And also Alutions, a mixture of aluminium and solutions. It's a sort of name that Homer Simpson would come up. But this was an aluminium company, basically, to just improve this vertical integration and to make them able to produce aluminium profile. And they remain open to further bolt-on acquisitions, particularly in US fabrication or in distribution as well. So I guess if you want to summarize it into a quick bull case for me, because I am actively buying this one at the moment, full disclosure, about 90% of markets of revenue, come from the US. Florida and Sunbelt areas are its key markets, as well as into Texas as well. big shift into residential revenues. It's recently making up about 50% of their sales. This for them is higher margin and less cyclical. They've got operational excellence because they're vertically integrated. They drive industry leading margins, the strongest balance sheet in the industry, and some favourable tailwinds. So we've got to see how the energy efficiency regulations are going to be changed in the US, but there is still hurricane resilience demand, and obviously US has major demand for housing as well. If you want to look at the bear case, it's essentially the opposite of that. They've got heavy exposure to Florida, a heavy exposure to the US market, so any kind of downturns in those two markets will hurt them. Obviously, they will be sensitive to economic downturns, or if there's a big US housing slowdown like we saw in the last 2008 and onwards for a little bit after that. And obviously, their main operations are in Colombia, which introduces both geopolitical and FX risks. But I think, Steve, it's a pretty decent outfit, really. High margin, fast growing, vertically integrated. It's kind of the stuff I like to see. I think it's got favorable demographics. I think the regulatory drivers look pretty positive for them as well, with the they have some onshoring in the US, so they should be able to circumnavigate the tariffs. I think the margins look good, next to zero debt. I think they look pretty well positioned, so I think they're a great company at a fair price, Steve, which is something that we probably strive to look for. I think execution is their biggest issue, and Trump's not going to be around forever, Steve, and Tecnoglass will certainly outlive them, and it'll be interesting to see whether they can 10x again in the next sort of decade or so.
They have something else that you like as well that I had noticed you haven't mentioned yet. You kind of hinted at it at the start, actually, which is they have a name that I can't spell, at least not immediately straight out of the gate anyway, because Tecnoglass doesn't have an H in it. And I was busy attempting to look this thing up actually earlier today when I remembered what you were talking about and thought, maybe, okay, fine. Quick FS, which I sometimes look at for kind of metrics, it's not always perfect with these, I'll be honest, but it's usually there or thereabouts in the right area, and sometimes they kind of pull the wrong number when they look down a balance sheet that doesn't always align things nicely into the categories they want it to. But I thought, maybe it's too small to be of interest to these guys. No, it's several billion market cap there, about 3 and a bit billion, I think, in dollars market cap, you were saying. So it can't be too small for them. And then I realized when I tried typing it into Google that Tecnoglass, does not have an H in it. So more good things to like about this company here. I see this as a kind of interesting hybrid of the best two types of business. When you were describing it at first, I sort of had in my head a little bit kind of DR Horton going on here. So it's in construction. And when we talk about DR Horton, that's the kind of place that you look if you like and think that to some extent houses are basically houses. They're not all the same, literally, but the big advantage you have as Horton is scale. You're able to build more houses, which means that you're able to use that scale to do things like stick a load of foundations in and then put a load of frames up and then get on to the next thing and the next thing. And you can keep your contractors going from job to job when you don't really run out, at least in theory. You also get the advantages of stuff like when stuff is in short supply, you're at the front of the queue for those things, so you can finish your houses better. And Tecnoglass is to some extent that kind of thing, but there's also this other little bit here which is in there, and better costs and so on and so forth that come with being big players and negotiators. The thing that kind of equally jumps out to me, though, that they have that differentiates them from a Horton, and is maybe the reason they trade at 20 times earnings, and that's not crazy by any means, is they have quite a bit of interesting sort of tech going on here in the Tecnoglass bit. I mean, they have actual patents around stuff, and I'm not really sure Horton does, or is interested in any for that matter, but it's not just a kind of commodity where I like commodity businesses. I think they're in some ways underrated. If you have lower costs than everybody else in a commodity business, I think that's a legitimately decent business, assuming it's the right commodity. See Southern Copper, a stock that's done very well for both of us. And to some extent, yes, cost advantages are good anywhere, but if you also have a nice kind of patent thing that allows you to push prices higher, it means you're not just fighting it out with people on prices because you have products that are sort of more resistant, more energy efficient, more so on and so forth. That plus the kind of benefits that come from scale and distribution, and as you point out, a strong balance sheet and the like, is a really nice and attractive picture to be thinking about here. You don't just win by having lower costs than everybody else, which I still think is a legitimate way to win, but you win by having kind of pricing power as well. Like, imagine if Weatherspoons were actually able to charge more than everybody else, and so on, because they had some sort of improved products on them. You pointed out the kind of cyclical risk here, and I do hear that in some ways, but I'm interested in this company as acquisitive because in a cyclical risk, you often find it's the people with the kind of worst balance sheets that get hit the worst, and these guys have a net cash position. So, worst case scenario, okay, earnings will be down a little bit, although there's not been an obvious sign of that looking through their annual results sort of recently. But when you're in a strong position and you head into a cyclical downturn, whatever that kind of looks like for your industry, and in the housing industry, that's reasonably clear. Um, I think what you find is that you're in a position to kind of stamp on the gas a little bit in terms of widening your moat in some ways. And I wouldn't be at all surprised to find that Tecnoglass is capable and able to do that. You said they like acquiring other companies with awful names, so we'll see if there is any around. I might go and start General Windows just so I can go and sell it to Tecnoglass when the next kind of downturn comes around for all of this. But yes, expanding their presence is probably helpful here. Glass products, even kind of premium patent technology glass products, I imagine are sort of expensive to go shipping around places. So you ideally want your kind of production facilities as near to the place that you're trying to build your facility or house or whatever the hell it is as you can get them. So that would be welcome, and the chance to kind of expand when things are looking rough in the industry might be very welcome, I think, Steve. So plenty to like there. Vertical integration kind of helps you with inflation, I guess, which means that you're not kind of having your input costs being shoved higher by suppliers, I suppose. And that's the other kind of big risk I typically associate with this area of input prices go up. They go up for everybody, so you don't lose your competitive edge, but you do lose your profits, at least potentially in some way, unless you can pass them on, which they have plenty of protection against doing. So inflation protection here is really interesting in this kind of company, I think.
I suppose there's one last thing I'd tack on the end of that, Steve, which I probably should have put in the numbers, but I seem to have missed. I was just thinking I didn't talk about the backlog. They've got about 5 quarters of backlog at full revenue rate as well at the moment, and that's growing about 25% year over year. So this is a company that has pretty good visibility in the US and the markets that it operates as well. So yeah, it's one that I really like the look of this about a couple of years ago, and it did run up quite a bit as well, and I noticed it done really well, and I thought it looked like it was trading a little bit expensive, so I kind of put it on the back burner. And then it was when the tariffs came, I thought, this thing is going to get caught in the tariffs. This thing is, even if they don't even materialize. The minute, and I went searching for it, I was like, oh, yes, here we go. This is the opportunity. And I snatched a decent handful of it. Now, obviously, that tariff stuff is still on the table, and it could get significantly worse. Let's not try and predict what Trump is going to do. I don't think anybody's been able to do that successfully. But I think I'm in a position now where I've got this at a reasonable valuation. If I have to buy it further down, I will do, and I'll be happy to hold this one for the long term, Steve.
Yeah, you made your way back a little bit from kind of April lows here, but it's just dropped off again a little bit in last month or so, almost exactly. So yeah, interesting to keep a look at, I guess, and we'll see where things kind of go from here. It'll be a nice one to keep an eye on because there are some obvious kind of long-term trends supporting this. I mean, Sunbelt and Florida and so on and so forth has been very attractive for real estate for quite some time, and I don't really see that. It will wax and wane a little bit, but I see that being sort of fairly durable in terms of strength. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.